But yes, FTX is now filed for Chapter 11, so they are officially bankrupt as of now. Hello, everyone, and welcome back to another edition of SwissBorg's Market Outlook. This week, of course, we'll be taking a deep dive yet again into the FTX story, seeing what kind of developments happened recently. A lot's been going on since last week. Of course, you know by now that Binance decided not to acquire FTX. So we'll be running you through a lot of the recent developments and how this FTX debacle has affected the entire industry. And then we'll be taking a look overall at Black Swan events in the crypto industry. So from last week, 7 days ago, a lot of things have developed in the FTX story. I wanted to bring you all a little bit up to speed on overall the recent developments, how this story is unfolded, and what other kind of parties could be affected by this drop. So, of course, as you know, last week, FTX had liquidity issues. They were over-leveraged. They were playing with users' funds in a way that they shouldn't have been, so a completely fraudulent matter. As a result, of course, FTT, their native token, dropped. It caused a mass bank run, as we would call it in the traditional world, where users tried to all collectively withdraw funds from FTX. They didn't have that money, and therefore the entire thing collapsed as a result. Now, following that, apparently FTX also got hacked in that period where all of this happened. It's unclear at the moment who hacked or what exactly happened, but the timing of this hack seems extremely suspicious. That's all I can say for the moment. What also happened is that FTX filed for Chapter 11. Therefore, they filed for bankruptcy. This was already hypothesized. It's pretty crazy how quickly this has happened since the start of this scandal, pretty much. But yes, FTX is now filed for Chapter 11, so they are officially bankrupt as of now. There are also various lawsuits coming through against FTX, coming from users, coming from affected parties, and not only lawsuits, but also potential fraud allegations and jail sentences. Now, of course, this is speculative for now, but the activities were extremely fraudulent. So the lawsuits are completely in line with how the US system functions. And also these potential fraud allegations could come to fruition eventually. This we'll need to keep up to date with the latest news stories to see if this is actually going to happen. Now, as a result, of course, the entire crypto market collapsed because of this issue with FTX. Most tokens across the industry are down at least double-digit percentages. Some are more affected than others. For example, Solana, for example, Crypto.com recently, but overall double-digit percentages across the industry. The last thing to keep in mind is what other parties are affected by this. So initially, there was a rumor that Crypto.com was heavily affected and they had clear ties with FTX or Alameda. These rumors seem to have been dampened, but it's unclear if Crypto.com still does have exposure or has some issues at the moment, as well as Genesis. So Genesis Trading and Gemini, they've also, Genesis have halted withdrawals, and it seems like they're also heavily affected by what happened with FTX. These are the first players in the industry that are coming out with potential issues related to this scandal. And expect a lot more to be coming out because, of course, with one of the big behemoths in the space collapsing, you can expect that a lot of the other players in the space were somehow tied to FTX. So a lot of people have been comparing this scandal to 2008. And it's not exactly because the dynamics of 2008 were the same as what happened this year, but it's because of the greed and profit element. So it's yet again a time in history in financial markets where profits and greed take center stage over security, safety, and over user interest, really. So, of course, what happened in 2008 was very, very different. In the simplest terms possible, mortgages were being given out to anyone. Didn't matter really if you could cover your mortgage or what your financial situation was. Anyone could get a mortgage. The housing market was booming. So literally anyone was offered, had the possibility to buy a house, and these mortgages were being then repackaged, and that's why this is called the subprime mortgage crisis. They were being repackaged in extremely risky assets or extremely risky new products that had been created pretty much for the purpose of making very risky investments, and for still being able to call these risky packages as the safest form of investment possible. Now, of course, this led to a domino effect where as soon as people couldn't pay back the loans, housing market collapsed, the entire global economy pretty much collapsed in those years. That's in the simplest terms. Of course, a lot more went on, but it's again the situation where profits and greed take over, and no one really minded for, yeah, but what if this collapses? What if this goes on? What if that goes on? It was just money, money, money. The machine kept going, and it seemed like an endless money generating machine until everything collapsed. In 2022, the story is very different. It's not really an incredible number of players in the industry that partook in this. It's really only a few players that led to this mass crisis. But it's again profits and greed that take over compared to caring about users' interests or caring about the sustainability of your platform. So in this case, it was a company, FTX, interlinked with another company, Alameda Research, that were pretty much performing extremely fraudulent activities with their user funds. So users were depositing and they were doing complete different things with those user funds. They were also extremely over leveraged, again, because that leads to the higher amount of profits. And when eventually this high amount of leverage led to a liquidity crunch, there wasn't enough liquidity to pay back everyone that wanted to withdraw. Because there was a bank run after this mass panic that was caused by the uncovering of Alameda's balance sheet and CZ's tweets, they didn't have enough liquidity, and this led to the collapse of the crypto market, at least in the short to medium term, since it's been going on. So again, these are two very important lessons of why greed and profits are never the right answer, why sustainability, long-term development, security, and safety of user assets should always be the most important thing in this market. After a storm, always comes the calm. And to look at this, we can look back in the past and we can use the same example of 2008, comparing it to nowadays. 2008 was one of the most drastic global economic collapses that we've ever seen. That's why it was called the global recession. In 1929, it was the Great Depression. In 2008, it was the Great Recession, because it was really one of the most drastic recessions we'd ever seen. What happened after that, though, is that, yes, of course, market collapsed, as they always do when a Black Swan event happens, or when some serious global event happens, or serious economic event happens. But what happened after 2008 in traditional asset markets is that there was a very long bull run after that. That very long bull run meant that investors saw over 120% returns, which is absolutely incredible. How can we relate this back to the crypto market? Now, we, of course, know that crypto markets fluctuate much more drastically, meaning that in downturns or in bear markets or in bull markets, the ups and downs are much more significant than what happens in traditional markets. So what does this mean? If we look back in the past at Bitcoin and we look at Bitcoin's bull runs, so the bull run in 2011, peaking in 2011, peaking in 2013, and peaking in 2017, those bull runs have been astronomical, and it's not even comparable to traditional markets, so stock market bull runs. In 2011, the peak led to $31, Bitcoin going to $31. The next bull run from that peak led to a 37x, meaning that the top was over 1,000 in terms of Bitcoin's price. The peak in 2017 was a 17x still from Bitcoin's price. And again, here we're looking at the returns from the previous peak. So not even if you manage to time the market correctly and bought at the bottom. In 2021, we also saw that from 2017's peak, not the bottom, there was a 3x because the price of Bitcoin went over 60,000. And at the peak in 2017, the price was over 20,000. All right, so that's a 3x. But that isn't showing the real picture, because the real picture shows that in 2017, When the bear market hit, Bitcoin dropped a lot more significantly than that. And actually, if you look at the amount of return you would have gotten from the drop in 2018 to the peak in 2021, that's over 20x. Now, of course, history doesn't necessarily always repeat itself, but there are clear indicators of why certain movements will be similar, right? And in Bitcoin's past, it's always been a 1 year collapse of about 80%, with the next 3 years being a bull run, and a significant bull run that leads to higher highs than before. Therefore, after a storm comes the calm, meaning that, of course, this event with FTX was tragic, but it doesn't mean that this is where it will stay. Therefore, if you manage to position yourself properly at the moment, stay safe with your assets, and engage in the right kind of strategy, you could be seeing a lot higher highs in the future if you take this day into account and you see this as an opportunity more than a defeat. Finally, to close up this week, I wanted to give you some advice on what to do after Black Swan events. So Black Swan events are events that we don't necessarily see coming, that can lead to drastic downturns in markets, and that is something really unexpected that comes out of nowhere. Something drastic like what happened with FTX, like what happened with Celsius, Luna, Terra, or the multitude of events that happened this year. So I always have the same kind of strategy when these Black Swan events happen, and it leads me always to the same 5 questions. And these 5 questions come from 2 main elements, which is, first of all, safety is key. As we've seen with Celsius, with Luna, with FTX, safety is paramount and should be the most important thing that you focus on at the moment. And the second most important thing is the interaction between this safety and then having a proper strategy. So do some financial planning, create your strategy, and create your investment focus. So when these 2 elements interact, it leads me always to the same 5 questions, which is, where am I keeping my crypto? Meaning, I, of course, am a very avid believer in SwissBorg, in how they're doing things in terms of user segregation, in terms of always being safe with all of these Black Swan events that happened. And therefore, it's a very important question to keep in mind. Where am I keeping my crypto? If you had it on a cold wallet, perfect. If you had it in FTX, not so perfect, of course. If you maybe have it on some other platforms at the moment that you don't think are trustworthy or that are necessarily doing everything properly, then keep that into account, especially with what's been happening lately. After where I'm keeping my crypto is, what is my investment strategy? So what am I trying to achieve through my investments? What is my focus? Am I trying to make money short term, long term? What is it that I want to achieve with my investment strategy? I've in the past had myself a short-term investment strategy and then quickly realized absolutely not. And now my entire focus is on long-term, is on the future, is on innovative projects, is on resilient projects that have always been there. That is my personal strategy, but you should definitely ask yourself, what is yours? And not just blindly invest without a purpose. Third is, how should my portfolio look like? This follows directly from the investment strategy, but in my example, once I know that my focus is long-term, how should I create my portfolio so that I maintain this long-term focus? Therefore, how much of my portfolio should be cash? How much should be stable coins? How much should be in the biggest crypto assets like Bitcoin, Ethereum, etc.? How much should be in smaller cap assets, like, for example, your Trader Joe or Sweatcoin, or smaller tokens, smaller cap tokens that could explode much more, though? So how should I be separating my portfolio and pretty much differentiating? What is the best way for me to differentiate? An example could be the thematics in SwissBorg, for example, which perfectly allow you to differentiate between a multitude of tokens depending on my conviction. That's also perfect. But ask yourself, how should my portfolio look like? What am I trying to achieve? Fourth is, when do I buy? When do I sell? When do I DCA? Now, this is important because if, like me, you have a long-term focus, I know when I need to buy. I know that there's some key moments when the market collapses where my dollar cost could be a lot lower because I can buy much cheaper. That's when I decide to buy. Also ask yourself, when do you sell? Do you sell when you've made enough profit? What is your target profit to make before you sell? Or do you not care at the moment and your vision is so long-term that you're not looking for short-term profits? The same is with DCAing. So dollar cost averaging is an excellent strategy during bear markets and during uncertain markets. When do I do this? How often do I have to DCA? Do I DCA every week in the same assets? Do I DCA every month or every day? These are questions that you should ask yourself, and try and find data that supports what is the right way to DCA. When is it, let's say, smart or acceptable for me to sell certain assets or buy them? So that should be the fourth one. And finally, finishing off with the fifth. Why am I applying this strategy? Why am I applying can relate to my conviction. So why I believe in the space, why I believe that long-term investing is better than short-term. It can be related to my conviction in terms of an industry, in terms of I see the play-to-earn gaming space being big in the future. I see the NFT space being big in the future. But at the same time, it can also be related to my research and data. So if I see that long-term investment focuses, so people that have always invested in the S&P 500, that seem to always make a lot more money than active traders, this kind of data clearly shows me that my conviction is right, that this long-term focus that I'm having is correct. Maybe you find data that it goes against your investment strategy and that can challenge why you're doing certain things. So these 5 questions are essential. They're always essential in general, but especially during Black Swan events in the market, these are moments where you should regroup, rethink of all those things, and really try and start your new investment journey the correct way. So I hope I finished off with some valuable lessons and valuable maybe food for thought for you. And therefore, I'm going to finish it off here. Thank you very much for listening. As always, I hope it's been informative. For any of the latest FTX news, I'll be following up with you every week. And overall, thank you very much for listening, and we'll see you next week. Take care.